Hi, welcome to the Market Alert for Thursday, the 12th of February 2015. And starting off with the 5-minute chart, you can see the pre-market session there fairly quiet. The market oscillating between the 17,800, 1 minute above, then back below, but using this as the sort of central point for the trading range in the pre-market session. We then see the market open with a triple X. We then see the market go on to trade up to the 20-point scalp before the market hits a resistance area. And you can see this here. If I just put on the markup tool here, you can see this resistance here, and then the market comes and bangs its head against it for a second time at 5 minutes past 3 here before we then get the triple X. So there's a pretty good clue. We've got this huge selling in this bar here, and then the market coming back down to the 800, it finds support, the market reverses, then gives you a second chance to actually collect the 20 points that are available there. It just didn't want to move any higher. It already showed you that with this resistance and the selling to the left as well, it would have required a lot more to actually drive through and head up towards the 850 level there. We then had the sell, the market going down and actually trading through the 800, but the market being tested here. And it's an important bar because you've got an increase in volume and you see the market being brought back there, and also you've got support over to the left as well. So we then get a buy signal, and unfortunately, because the stop is so close, this one is stopped out before the market moves higher. So just as a tip for you with trading as far as the test bars are concerned, the low of a test bar is a critical point. It's where the buying actually comes in. As you can see there, the buying comes in, you see the market being brought back, and then we're back at the 17,800. So there is a way of actually trading this. Instead of using the 10% stop, what you can do is actually use the previous low, i.e. the low of the test or just below it, and then adjust the bet size to still not breach the sort of 1% risk of available funds there. And that would have allowed you to have actually stayed in this trade up to the 850, which the market obviously was attempting to do all morning, except it failed here because of the selling coming into the market. So what the professionals decided to do is said, okay, let's get rid of the sellers. They moved the market lower. We have low volume, so the selling is removed. We then see them test the market over to the previous lows where we saw the buying come in here, and then they move the market back up until the market hits the psychological level, which is no surprise there. And we then see prices trading sideways, again coming up near enough 3 times to the 850 level before being sent back down. And again you see the market being tested once more after 4 bars of selling. This one fairly climatic in that it's higher than the previous 3, and then the market turning around, and guess what, we drive the market back through with professional buying to sit on the 17,800 level there. So there's a sell that comes in there, but the market fails to close below. And here's your first clue in something like this, because we're already back above this at 17,800, which they've wanted to keep the market above in the early part of the session, apart from when they drove down, got rid of the sellers and brought the market back, which you see with the professional buying bar. The market goes through, and it's good to have the entry point below because it could have continued lower. There could have been no interest in any buying, and the selling could have increased as we saw previously. However, if you look at this price bar here, and I'm just going to change the color of the volume for you just so you can see this. Let's go for a slightly darker color. It's probably clearer now, and you can actually see there's a spike in the volume here on this bar as well. So this spike coming in brings the market back above the 17,800, and then we switch and the market then goes up as the new buying takes hold. You'll see that there. The market trading up to the 20-point scalp, but as I've said about the psychological lines, this is where the market likes to head towards these like a magnet, and you see the market heading to this one and then heading to the 850, sorry, the 900 in this case on this one as well. So the potential available in this because of what's in the background. The market didn't want to go down because each time it's gone down, the market's been brought back above this 800 level. And then you've got the first psychological level there to the 850, which is 31 points, and then onto the 950 as the market drove through the 850 up to the 900 area of 79 points there as well. In the daily chart, we've got the market actually closing through the 17,920 for the first time in some time. Because of the resistance that we've had, the market came back, turned around and moved higher. The volume's been low. It's dropped off markedly in the last few days, as also the trading range as well. Let me just narrow these bars a bit. So we can see we've got this resistance. The market's back below it this morning in the pre-market session, so it's got to drive through in order to go up and head to that 18,105 level where the all-time high sits at the moment. On the news front, we've got nothing out at 3 p.m. apart from business inventories. Medium impact news item forecast is the same as the previous. Prior to all of this, it's pre-market, and there will be some volatility with core retail sales, weekly unemployment claims, and then you've got Carney speaking at 10:30. The chairman of the Bank of England, so it'll be interesting to see what he's got to say. And it generally, whatever he says, you might as well do the opposite, because he changes his tune every time he does make a statement, or he comes up with some other method of calculating inflation before he has to make the decision of increasing interest rates, along with the other 9 members of the board in the Bank of England. In the implied volatility, we've got a modest increase yesterday, 1395 to 1401, just a slight increase in this. So again, starting to calm down, and again we could do with the blue line dropping below the yellow implied there. Right, that's it for me for this morning. Much better day yesterday. Hopefully this is setting a precedent that things are going to improve now. We get back to some sort of normal trading, lower to moderate volatility, to give us those nice trades that I spoke about yesterday, and which actually happened during yesterday. Just a slight bit of volatility here and there, but other than that, looks like things have calmed down at long last. Right, see you in tomorrow's edition, and as ever, thanks for watching. See you in the next